Hello, I am Professor Feroz in M.A. Khan. I am a professor teaching company law and finance in Fortune Institute of International Business, New Delhi. Today, I will introduce you this audit and auditors under Companies Act 2013. So, besides, I will tell you the rules and regulations. I will also tell you about the integrating the regulations with the practical aspects. Okay. So, just to give you an overview, okay, Chapter 10th of the Companies Act 2013 under Section 139 to 148 deals with audit and auditors. Okay. So, just to tell you the basic premise on which this audit and auditors are very much depending on. Okay. So, accounts, as you know, accounts, when we say annual accounts, these are the very relevant financial statements, say statement of profit and loss, or which you earlier were saying profit and loss account. Next is the balance sheet, next is the cash flow statement, and besides other things, notes to accounts and other things. So these accounts are prepared by the board of directors. Now, these accounts, when it is completed or accounts are completed, so these have to be handed over to the shareholders because they are going to look at how the company has managed the how the board of directors have managed the company in the last 1 year. And similarly, when the company has been managed properly, when the company has got a profit, so now the company will declare dividend. So shareholders are looking forward to also the rate of dividend declared by the board of directors. But before that, before the accounts are handed over, though it is complete, but before it is handed over, now the auditor's role come into picture, because everything, when their accounts, when you say everything is done by the company, the board of directors, now it has to be vetted, it has to be verified, it has to be audited by one external agency. So that's why the auditor has to come into picture. Otherwise, the shareholders, they will not be relying the statements, the financial statement prepared by the company. So just to ensure that the financial statement reflects true and fair view of the financial positions or the net result of the company, so the auditors come, they play a very vital role. Okay. So shareholders are going to rely the accounts only when it has been audited by the auditors. Okay. Now, based on the report, because when they are checking the accounts, when they are auditing the accounts, the auditors, so definitely they will come out with a lot of the comments. Okay. Sometimes the comments can also be the adverse comments. So if it is adverse comment, definitely the board of directors, they have to reply. Board of directors, they have to reply to the comments. So so along with the comments given by the auditors plus the clarifications given by the board of directors, now with accounts will also be submitted together to the shareholders for their informations. That's why in the annual report we find besides the profit and loss account and balance sheet, there is also a auditor's report. Okay. So now you understand that accounts are subject to a lot of criticism. The investors are looking forward to take a understanding of the profit the company has made, and investors, the good investors also look forward as to how the company is managing the affairs of the company. So how the company is investing. So ultimately, future outcome also they are looking forward to it. Besides the profit, they also look forward that the company is going to be better and better, in future to come. So lots of things are definitely connected. Lots of stakeholders are connected. It's not simply the shareholders. It is also even the bankers, the creditors who are connected, even the employees, even the unions, even the government, even income tax department, what not. So a lot of stakeholders are connected to the company, and so they all look forward to have a proper understanding of the accounts and financial statement. So their understanding gets better when they see that the accounts have been audited by the auditors. So that's why the role of auditors come. So it somehow you can say it bridges the gap between the company management on one side and the shareholders on the other side. Okay. Now, before I take you to the deeper of the rules and regulations and further integrations, let me tell you what is the learning outcome from this module. Okay. So if you read this or if you watch this video, definitely you are going to relate the relevant provisions of section 139 to 148. So section 139 to section 148 of the Companies Act 2013 to further developing an appropriate system for audit of the accounts and financial system in the company. So these sections are definitely going to be a kind of base. It will create a base for developing a proper system of audit of accounts and financial system. Okay. Similarly, as we know, there is an audit committee. As you know, there is an audit committee in every company. The audit committee comprises the members, it comprises the directors of the board, and as we also know that most of the directors audit committees should be the independent directors or non-executive directors. So now audit committee is very instrumental in connecting with the auditors and audit work. So audit committees are going to recommend the auditors to who are to be appointed as auditors, and who are the firm or the individual going to be appointed as auditor. Similarly, they are going to review also the findings of the auditors. Even they are going to look at any loopholes or fraud or any mismanagement which is pointed out by the auditor. So definitely another learning outcome is after watching this video, understanding the rules and regulations, definitely you will be able to develop a proper understanding as to how the audit committee and the accounts department in one hand they coordinate with the audit and auditor. So there are two sides. One is the say audit committee and accounts department. The other side is audit and auditors. Okay. So how there is a proper coordinations being maintained, looking into not to forget this aspect that section 139 to 148 of the Companies Act to be complied. Okay. So majorly these two are the outcome. One is through this we can relate the sections in understanding how whatever the system existing in the company, whether that system is appropriate or not. Second thing is we will also develop an understanding as to proper coordination between audit committee and accounts department on one hand, and audit and auditors on the other hand. Okay. Now let me quickly talk about which are the sections, what it talks about. Section 139 deals with the appointment of auditors. Section 140 talks about removal, resignations of auditor, and also relates to giving up special notice. Section 141 explains the criteria of eligibility, qualifications, disqualifications of the auditor. Section 142 talks about remuneration of the auditor. Then section 143 explains power and duties. Section 144 expects auditor not to render certain services. Section 145 deals with provisions for signing auditor's report. Section 146 deals with provisions relating to auditors attending annual general meeting. Section 147 prescribes punishment for contraventions of the above sections from section 139 to 146. And last section is the section 148 that speaks about the cost audit. So while I am talking separately each and every section, I would also tell about the analysis of that section. Okay. So section 139 says that subject to provision of this the Companies Act, this chapter, every company shall at the first annual general meeting appoint an individual or a firm as an auditor who shall hold office from the conclusion of that meeting till the conclusion of its 6th annual general meeting, and thereafter till the conclusion of every 6th meeting, and the manner and the procedures of selection of auditors by the members of the company at such meetings shall be such as may be prescribed. Similarly, this section also says that no listed company or a company belonging to such class or classes of company as may be prescribed shall appoint or reappoint an individual as auditor for more than one term of 5 consecutive years, and B, an audit firm as auditor for more than 2 terms of 5 consecutive years. Now this is broadly the section talks about the appointment of the auditor, but if you analyze this section, definitely there are lots of finer things. The provisions might effectively protect the nature of the auditor for 5 years, while there might be also stringent provisions on removal of the auditors. Okay. If rotation affects the long term relationship of the company and auditor, then the 5-year appointment brings also stability. So there are also power to shareholders given to the shareholders to change the auditor before the expiry of the term. There are stringent tribunals authority to suo motu change the auditor, which appears quite punitive and could be disruptive to the audit professions. There might be disproportionate punishment for a minor act even, and it could potentially close large accounting firms overnight. Audit committees should develop an internal system for assessment of eligible firms for appointment and smooth transition of auditors. Rotation of auditors are new concepts, and same would create a stir in the companies, as companies were very conservative to change their auditors. The change of the auditors would also likely to have an effect on overall, definitely the change of auditors would like to increase the cost for the company, but looking from a broader perspective, perhaps it is most appropriate.